Oil prices have surged to record highs, reaching almost $100 a barrel. Just what's caused this once unthinkable rise, and what does it really mean for consumers and the global economy? This is Inside Story. Hello, I'm Imran Garda. The price of oil is expected to top $100 a barrel in the coming weeks. Experts say the era of cheap oil is now dead. So what will that mean for all of us? Leaders of Opec, the organization of petroleum exporting countries, will meet on Tuesday in the Saudi capital to discuss the spiraling price rise. They're thought to be split on whether to increase production to help bring prices down. Some say short fix solutions won't make any difference in the long term, and the OPEC countries account for only about a third of global oil production anyway. So just why have oil prices gone through the roof? Well, first, rising demand, with projections driven by China and India, where energy use continues to grow at a frantic pace. Secondly, low stockpiles, particularly in the US, suggesting the world is using more oil than it is producing. And thirdly, political jitters. Questions, for example, over the future of Iran, Iraq and the rest of the Middle East, which still holds two-thirds of the world's oil reserves. And the state of the dollar also plays a significant part. Oil prices are quoted in dollars, and the dollar, of course, is weak, hence cushioning the cost for many buyers. But if Gulf oil-producing states repeg their currencies to a stronger alternative, as some seem poised to do, then the price of oil will rise accordingly in real terms. Well, joining us to discuss the world energy crisis are our guests in London, Dr. Mamdouh Salameh, and international oil expert and energy consultant for the World Bank. In Washington, D.C., Tyson Slocum. He's the director of Public Citizens Energy Program. And here in Doha, Dr. Ibrahim Owais, an international economic advisor and professor of economics at Georgetown University. Gentlemen, welcome to the program. Dr. Salameh, if I can start off with you first, sir. In your opinion, what is driving oil prices so high? Is it easy to define?
It is easy to define. The main factors underpinning the rise in the oil price, you mentioned at the start, the global demand for oil, particularly from the Asia-Pacific region. The second factor, which you didn't mention, is the fact that the world is consuming 31 billion barrels a year, but discovering less than 6 billion. A third major factor is the fact that conventional oil production has peaked in 2006, last year. And unconventional oil, like Canada's tar sand oil and Venezuela's extra heavy oil and biofuels, can hardly offset the decline in the conventional oil. When you add to all these the fact that the world has also a very tight production capacity, then you can tell why the oil price is going up. The political tension is a factor, but the rise in the oil price will continue upward even without the political tension. However, if there is an escalation of tension between Iran and the United States, then we can expect the oil price to go beyond $150. I am now projecting at the current situation a price rise to $110 a barrel in the start of the new year.
Mr. Slocum, in Washington, D.C., giant oil companies must be laughing all the way to the bank, right?
Absolutely. And not only giant oil companies, but a lot of the financial firms like investment banks and hedge funds that dominate the energy futures markets where prices of oil and other petroleum products are set. I don't really see any supply-demand fundamentals that justify the price being as high as it is. I see that speculators are driving this higher price. I think that the current price is about 30% pure speculation. And some of these speculators are moving more of their investment money into commodities markets like petroleum because they're fleeing the U.S. stock market. They are putting their money into a place where they can see bigger profit taking and that right now is oil markets. So you're going to see record high winter bonuses for hedge fund managers, for managers at Goldman Sachs Commodities Fund, at large vertically integrated petroleum companies. And all of this, of course, does translate to much higher prices for home and business heating costs and for motor gasoline in the United States and other large consuming countries.
Dr. Ibrahim Owais, how much are speculators to blame, and is the biggest catalyst still the concept of supply and demand?
They have to take the current situation into account, particularly the political tension, and therefore speculators are interested to make more money under these conditions, particularly at the time when there is more excessive demand for piling up the storage of oil in the future. And the future markets in oil will definitely reflect the fear from the tension with Iran. This is the biggest the most important factor, in my opinion, now, because one can project the increase in demand, you can project what is going to be the supply, but the uncertainties that are hovering around the political situation in the Middle East and the threat against Iran is, in my opinion, the most important factor for the time being, and therefore we should not really blame the pile-up of storage of oil. We should not ask the speculators not to stop that, but they do that because it's a very complicated structure that all of the factors that had been mentioned play a role, all of them, but if we just zero on the one factor, which is very important, and that is the tension with Iran and the possibility of hitting Iran by the United States or by Israel, and therefore the consequences of this will be drastic, because definitely the Iranians will not stop and would retaliate, and they would retaliate against the American interests in the region and the oil supplies here, and the price of oil will definitely go much higher than what my colleague had said, probably $170, $200, so that the people would buy the oil at whatever price that they can afford in order to cope with the uncertainty in the coming few months.
Mamdouh Salami in London, do OPEC have a point by saying that the rising price is in no way the fault of theirs?
Before I answer that, let me reply to what the two gentlemen mentioned. Speculation is a minor factor. Tension in the Middle East accounts for less than $10 a barrel out of $100. So the main factor is a growing imbalance between global supplies and global demand, which cannot be reversed by further price rises. Now, going back to OPEC, OPEC unfortunately cannot play any significant role in controlling the price now, simply because they don't have extra production capacity.
So do you believe that OPEC is failing miserably in keeping prices within range?
No, they are doing very well. The price, the benefit for them has been fantastic, but they are not able to prevent this steep rise in the oil price, since they don't have the extra production capacity to be able to tamper that rise. Consequently, they feel neutral, or they are just now a bystander. They don't have the capacity to introduce to the market any new supplies. Consequently, they cannot control the price, so they just watch helplessly.
Mr. Slocum in DC, do you believe that India and China's energy thirst Just for example, those two massive nations which have populations of over 1 billion, do you believe that their thirst for energy cannot be quenched at all without the price of oil going absolutely berserk?
Yeah, I mean, I really do think that demand, whether it's in India, China, the United States, or Europe, is relatively inelastic. And that's because people have to continue consuming in order for our economies to function. And as long as the Chinese yuan continues to be pegged to the dollar, China is in the same exact boat as we are. They do not have a competitive advantage, which is probably what's going to lead China to de-linking the yuan to the dollar and moving more towards the euro. Demand is going to continue rising, but I don't see these supply-demand issues driving the price. Again, demand has been increasing for a while. Increasing demand in China and India is no longer a surprise. Demand continues to grow in the United States, but yet there are no shortages of crude oil in the global marketplace. There are some problems with refining capacity and getting enough refined products, but that doesn't necessarily justify the increases in crude oil that we're seeing. This really is being driven by speculation, and to argue that tensions in the Middle East is what is driving it to $100 a barrel, we've had tensions in the Middle East for years now. This is coming as no surprise. Iraq has been a dysfunctional oil market for years now. And I just don't see any supply-demand justification for the high prices that we're seeing.
All right, gentlemen, stay with us. Time for a short break. But when we come back, we ask, has oil wealth given governments of exporting countries the capability to play bigger political roles on the world scene? Do stay with us.